What is going on, investors? Hopefully you guys had a great day out there. And tell you what, if you own Apple stock, today is just a great day because you got a 7% raise. We'll talk about that. The stock is up about 3% in the after hours. It is hitting its head on some resistance here. So we'll talk about that when we get over the stock chart. Can this one break through? We just saw Facebook and Google pop up to the upside, up to all-time highs. Apple is not there yet. So it could potentially, if you're not in Apple, could be a potential that you could get in before we make all-time highs. It could be that we get rejected at this level and we see a pullback with Apple. We'll see what happens. Now, it's a fantastic year for Apple over the last year, up 90%. Year to date, though, basically flat, up 1.28%. But here's the beautiful thing about buying and holding Apple for a long period of time. They just raised their dividend 7% to 22 cents per share. And you might say, well, 7% is not that big of a deal. Well, look, last year, I think they raised it a similar figure. Okay. And so year after year, as you compound interest on this one, you're not only compounding the interest, but they're raising the interest, or in this case, the dividend year after year. That's an extraordinarily powerful thing. They also boosted the buyback by, $90 billion. $90 billion share buyback. 90 billion is worth more than almost every company in the world. And Apple is going to buy back $90 billion worth of their shares. So if you're not on this Apple train, I'm going to just show you this. I'm not showing this to flex. By all means, I could show you my Rolex or something if I wanted to flex. Apple shares started buying these back in, September, October of 2014. And spoiler alert, I've never sold. I've just bought and bought and bought. My cost basis is about $38 per share. The last time I bought shares of this, I bought 2 shares back almost last year around the same time I started buying them. Back on 9/11, 2020 was the last time. But, over the years, I've bought shares almost every year. And I'm up just, 245% on this one. That's a $5,100 gain. That is $7,279. Now, for some of you guys, you might say this is not a lot of money. Keep in mind, this is in an IRA account. I can only deposit $6,000 a year into this account. So to have $7,000 wrapped up in the stock is actually pretty nice. Now, let's jump over to the numbers because that's really what happens. The reason why I'm showing you this is for you new investors out there that don't understand the power of holding stocks like this over a long period of time. Not only good performing stocks, but ones that pay a dividend and grow that dividend. Well, here's an example right here. I bought these shares many, many times over this years. There had been analysts on CNBC and on Seeking Alpha and all these sites out there and probably on YouTube here saying, sell Apple, sell this, buy this, buy this. No, just hold it, guys. Just hold it, put it in your portfolio, and just let it grow and grow and grow. Because when we come over here and look at the statement of operations, you'll see growth here. Okay, so net sales here. We got our products and we've got our services here. So we got our 3 months ended here. This was last year. This is this year in this left-hand column. We got our 6 months ended here. This is last year and this is this year in the left-hand column there. So we've got a year-over-year view on a quarterly basis, year-over-year view on a 6-month basis. Product sales went from $45 billion. I thought that was impressive. Now it's $72.7 billion in a quarter. We're not talking about a year. We're not talking about a lifetime. We're talking about a quarter, 3 months, $72.7 billion. I'll let that settle in if that doesn't impress you. For the 6 months, we're sitting at $168 billion. I mean, these numbers are almost unbelievable, honestly. Services here, I almost think I'm dreaming. Services went from $13.4 billion up to, we'll call that $17 billion. For the 6 months, we went from 26 up to 30. We'll call that 33. Total net sales, close to $90 billion, $90 billion, which is more than almost every single company in the world prints in a decade. This company does it in 3 months. If this company along with many of the other FANG names that we cover here on a regular basis on this channel, if these stocks are not the cornerstone of your portfolio, you're doing it all wrong. Period. Okay? $90 billion in a quarter, $201 billion in net sales over 6 months. If you're invested in penny stocks, solar stocks, energy stocks, high-flying whatever stocks, before you've gotten a full allocation of Apple, you were doing it all wrong. Period. End of story. Cost of sales. We've got products. And look, if you've got Apple in your portfolio and it's a cornerstone, you're doing things exactly right. Just keep it up. Good things are ahead, because when we go through these numbers, you'll see more good stuff. So our products cost us $46 billion to make this 72. Services is where this juicy margin is. Okay. We'd love to see this service revenue just continue to tick up, because we only spent $5 billion to make this 17. So our total cost of sales came in at $51 billion. You minus off 89.6 and you get this gross margin at $38 billion. Last year during the quarter, we were at $22 billion. Everybody thought that was unbelievable. Now we're, $16 billion more than that. Unbelievable. And for the 6 months, we're at $82 billion. Okay. We made $201 billion worth of net sales. Gross margin, we gross $82 billion off that. Oh my goodness. Research and development here, selling, general, administrative, we're seeing over the year on a quarterly basis up marginally. Okay, we went from 9.5 to 10.5. So we basically bolted on about $1 billion to the operating expenses. Okay, when you grow gross margin by $16 billion and you only grow operating expenses by $1 billion, you guessed it, operating income exploded. Basically, actually more than doubled. We went from $12.9 billion up to $27.5 billion. This is not for a year. This is not for 2 years, 5 years, 6 years, 10 years. This is for 3 months. Operating income of $27.5 billion. People wonder why these companies are worth over $1 trillion. Okay, every single company in the world that's ever been started would love to be printing operating income of $27.5 billion in 3 months. Even if it was just one time. This company does it time and time and time again. Okay, for 6 months, we printed $61 billion. Okay, a lot of that is flowing down to the net income side. You pay some income taxes. You got some other stuff that you got here, and you come down here to net income of $23 billion. That's $1.40 diluted in a quarter. That's $3.08 diluted in 6 months. So we talked about the dividend. We talked about the dividend growth. Okay, right now, they raised the dividend to 22 cents per share. That's up a little bit from what's quoted here. So you're sitting at 88 cents per share per year. 88 cents per share per year. And this is a company that's doing $1.40 in 6 months, $1.40 in 3 months, $3.08 in 6 months. You guessed it. Next year, they're going to raise your dividend again, and they could easily raise it 7, 10, 15. They could raise that darn dividend by 20% if they wanted to. Now, what else are they doing in their cash? Take a look down here. Share count went from 17.6 last year down to 16.9. So they're just continuing to buy back shares over at Apple. Now, net sales by reportable segment. So we've got the Americas, Europe, Greater China, Japan, Asia Pacific, the rest of Asia Pacific, and we're just seeing strong growth across the board. Okay, these Greater China numbers, you definitely like to see this. These are accelerating nicely. Europe really accelerated nicely. You like to see that up from 14 to 22. And you see America, obviously the big buyer of Apple products, went from 25 to 34 in the most recent quarter. And you're seeing similar trends over the last 6 months as well. All things being considered, very, very strong growth. Now, net sales by category, iPhone obviously dominates, but Mac is coming in strong. iPad comes in strong. These wearables and home accessories, there was a press release out today that the AirPods aren't selling quite as fast as they were in previous years. My guess is because people that have the AirPods have already bought them, and the people that don't want them will buy competitors or will just slowly adopt that technology. So you're seeing a little bit slower growth, I think, here in this wearables. But Apple's, this wearable and home accessories, this is where Apple will bolt on new products, okay? They've got those new AirTags. I don't think those necessarily will be a big driver, but there's been rumored that they're going to have these glasses, okay? So you have like these Apple glasses. That could be a pretty sweet wearable, could bolt on some revenue here. And then obviously the big cloud over Apple is, will they get into the car business, and how will that fit into these types of revenues and profits? Because let me tell you what, they could support a car business right now because this company makes mucho cash. Now, speaking of cash, here's our balance sheet right here. We've got cash and cash equivalents and marketable securities. We had 38 this quarter. We had 31 in marketable securities last September. So this is a 6-month view. We had about, this is 90 billion. And right now we're seeing 69 billion. So you're wondering, well, wait a second, where'd the cash go? Well, what Apple does is they put some marketable securities down here in non-current assets. So these must be 12, like greater than 12 month maturities. They've got 134, we'll call that $135 billion. They had 100 billion of that in the previous period. So they've grown that by about almost $35 billion just over the last 6 months. So you're seeing some of the cash kind of come from the current asset side, just come down here to the non-current asset side. Now, total assets are coming in from 323 up to 337. Everything looks really, really good here. Now, from the liability side, I think you can learn something here. So term debt, they've got about 8 billion of that due. So this is due over the next 12 months or so. They got non-current. This is term debt that is due later on. They've got $108 billion. Okay, that's $10 billion more than they had last year. So I have friends come to me all the time and they're saying, I don't want to buy a house. I don't want debt. I don't want a credit card. I don't want this. Now, look, some debt like credit cards, student loans, personal loans, things like that, not necessarily good debt to have. But the example I always give these people is Apple's one of the richest companies in the world. They have almost darn near they actually have over $200 billion worth of cash. And I tell them, this is a company with over $100 billion worth of debt because people are willing to loan this company money super cheap, like basically for nothing. And what do they do with that money? They buy back the stock. That's pretty much all they do when they borrow money at Apple. And so borrowing money, leveraging money done right, we can see evidence of it here at Apple. And I think you could apply this not only to your financial analysis, but also maybe your own life as well. Now, moving on to the statements of cash flows, we just pulled down $52 billion here to the net income. I mean, it's unbelievable. We got 6 months ended here. We got last year, this year. So we pulled out, and they show this cash up here, but I'm going to focus here on this net income. Pull down $52 billion. We were at I thought $33.5 billion was amazing. Now we're sitting at $52 billion. So we get to add back in some depreciation, some share-based compensation that gets us cash generated by operating activities. Oh yeah, we're just up to $62 billion in 6 months. Basically, Apple basically makes $10 billion of cash running their business every month because this is for 6 months and they printed $62 billion. Last year, they were sitting at 43.8. So it just shows you that a company this size is just still accelerating, which is just unbelievable. Now, we'll see this repurchase of common stock. We did $39 billion last year, $43 billion. Okay, that is why this is why I continue to recommend this stock, because guess what? You have this big, gigantic buyer sitting behind all these shares. Now we've got payments for dividends sitting at $7 billion, up just marginally. Okay, when they buy back this stock, it retires the dividend that they had to pay for that. So that is why they can raise the dividend by a lot more than 7%. But when you see 7% here, it doesn't mean necessarily that they're going to pay 7% more than they did this year, because they're going to buy back a ton of stock. That stock is going to retire. So the dividend payments are actually not going to go up quite as much as what you see here on this 7% raise. That's why this company can afford to keep raising this dividend. It's just a beautiful, beautiful thing if you are a shareholder. That's the end of the financial documents. I want to jump over to the stock chart. The stock is sitting right on this line that we analyze on the show every Friday. All the FANG stocks, that obviously includes Apple, Amazon, Google, Facebook. We throw in Microsoft and Tesla and Netflix, obviously, as well. Now, so we have these lines in forever, basically. I almost never move them. When you have a stock this well covered and this well owned, you don't have to move these lines around. Now, the stock peaked back here in December right at 137, and it went down. And then it blew above 137. When it got above 37 on momentum, it came all the way up here to 145, but then came all the way down here to 116. And now here we are all the way back again. Now we saw some resistance here. It acted at 137, acted as some resistance shortly after kind of this blow off top rally, kind of pump fake fall. Now here we are at 137. So two things can happen here at 137. We can get rejected just like we did here and here back in December and back in late January and February. We could get rejected here at 137, come back down to 134. That would be your first spot to buy this. If it gets rejected here at 137, odds are, honestly, it's probably coming down to 134, 135. You could pick up some shares there if you want to. Again, it depends on your portfolio construction, how long you've been investing, those types of things, how big you want to go on Apple. Would I go really hard here at 135? No, probably not, because if you break 135, there's some other levels in here that I probably would like this stock as well. The other thing that we have to keep in mind is just the gigantic buyback that Apple has. Man, this stock dips, and guess what? Who's going to come in there and dip by it? Well, Apple's going to come in there and dip by it. Now, if we can get above 137, the stock is just stalled here, but if we can get above 137 on some volume, yeah, this one's probably going to have an opportunity to come up here and retest all-time highs 145. You get above 145, and there is absolutely nothing above here in terms of price action. So this thing could be like a Google or a Facebook, which we've seen. If you look at Google's chart, Google has just basically gone as parabolic as a mega cap can possibly get over the last few weeks and months. I mean, this was a $1,700 stock in January, and now it's bolted on over $700 to that share price, and it's trading upwards of $2,300, $2,400 per share. So Apple could easily get over 137, and if it gets over 145, sky's the limit. 150, 160, 170 wouldn't surprise me, okay? Because when we look at this stock, 30 PE, this is probably not factoring in today's numbers since this dividend is not updated. We can get updated. You can update these numbers with your own time, or you can wait a couple days, and all the sites like Seeking Alpha and Yahoo Finance and things like that will be updated with the current time. Look, a 30 forward PE is not wildly overvalued, especially when you factor in the dividend rate, the growth rate, everything that we have going in here with Apple. So this is a buy and hold stock. I've been buying and holding it for nearly 7 years now. It is a cornerstone of my portfolio. It is, I think, the second. So my number one holding is Amazon. I have 13,800 in Amazon. Probably a little overweight on that stock. Second highest holding is Apple. Next highest is Facebook. Nike, I just happened to time very correctly, and I have a pretty large holding in that. And then you have Google as well. And so you have the cornerstone of FANG being the top holdings in my portfolio. I mean, this is well over half. This is a $52,000 portfolio. This is very close to half, I would think, of that total. In fact, it's probably a little bit more. So hopefully you guys had a great day out there. That was Apple. Leave me a comment down below. What do you think about this one? Hopefully we can bust above this 137 level and get to all-time highs, because then the fun really begins. So hopefully you guys had a great day out there. We'll be back with more again very soon. Good luck with your investments.